Most people think that money laundering ends when you buy a property. Nope. You can see a lot of activity in the real estate space, but then there are no easy ways to find out who is behind them. You can be part of a money laundering chain without even realizing it. It's more like the, oh, I'm expecting some money soon kind of transaction. The money you're using to buy the property is not even your money in the first place. You see, it doesn't make sense, right? Most people have no idea it's happening. The truth is very different. Some months back, we highlighted the problem of money laundering in the real estate space in Ghana. And in that episode, we broke down what money laundering looks like, the different stages, the red flags, and how real estate is so attractive to criminals. But then that episode was just the surface. Now, there's a whole hidden world behind the scenes, the subtle, sophisticated, and sometimes invisible ways money laundering quietly flows through real estate transactions across the world. Today, in part one, we're diving into the hidden faces of money laundering, the things that you don't see, the things that the public never hears about, and the things that many professionals don't even realize are happening right in front of them. These are the layers that make the industry vulnerable without even realizing it. So let's get into it. One of the biggest misconceptions about money laundering is that it's done by suspicious people who look like criminals. But then in the real world, and this is documented globally, the majority of people who are laundering money that ends up blending very well into real estate transactions look perfectly normal and very respectable. They will dress well, they speak confidently, they provide very clean documentations, they work through registered companies, and they show proof of funds. And that is a very key thing. And they will also present very legitimate bank statements. Everything is polished, everything appears very credible, and even their lawyers and accountants and even the company documents that they present, everything checks out. This is why relying on your gut feeling or appearance is one of the weakest ways to detect risk in real estate. You may not see it coming. The hidden phase of money laundering starts with this truth that the people who are involved normally don't fit the stereotype. Criminal networks know that the safest way to avoid suspicion is to look very clean. And you'd find out from a lot of investigations that the most dangerous transactions are the ones that look completely normal with no red flags. Now, this is why the real estate industry in Ghana must be very hard on verification and also not just judging people by their appearance, because in the end, wolves can be in sheep's clothing. An uncomfortable truth many developers have to deal with is the fact that, you can be part of a money laundering chain without even realizing it. It's not because maybe the developers are complicit, it's not because they're careless, it's just simply because the structure of real estate sales makes it quite easy for criminals to hide within legitimate demand for properties. And the larger the property development, the easier it becomes. For instance, if someone, maybe an entity, acquires units in a bulk purchase, that can be a red flag. Now, it doesn't mean that automatically this translates to money laundering. Of course, there are many companies that can take up multiple units in a project for their staff, or maybe as an investment, maybe something like a real estate investment trust, a REIT. Now, another instance could be buying a unit or more off plan and paying full price without any negotiation. Now, the property market is a marketplace, and in the market, we negotiate. So when you don't have any reason to negotiate, it can feel like maybe you're so rich, you don't need a discount, or maybe the money you're using to buy the property is not even your money in the first place. Another instance is when a buyer insists on some unusual payment structures. Let's say the property costs about 10 million Ghana cedis. The money launderer, the criminal here, can pay 1 million here, 4 million there, a few 100,000 here and there, and the payment structure doesn't really have any predictable structure. It's more like the, oh, I'm expecting some money soon kind of transaction. Another key instance here is when payment is made through international transfers that are routed through multiple banks just to hide the source of the money. Now, the point I need you to note here is that none of these instances that I just mentioned means that something wrong is happening. No. But generally, and even around the world, these are the known patterns exploited by money laundering networks. So you'd see that property developers who are focused on completing projects, meeting sales targets, and securing cash flow may not have the full visibility they need into the source of the funds that they receive, especially when transactions come through layers of intermediaries and middlemen. The hidden side of money laundering is that it often rides on the back of genuine real estate activities. It doesn't always look like crime. It often looks like maybe just some successful sales for the month for the developer. And the sales and marketing teams would think that their campaigns and systems are working when really the truth is very different. In our earlier episode, we talked about the real estate ecosystem. Now, let's go deeper into the professionals who sit quietly in the background. We'll call these people the gatekeepers, and they often include the lawyers, accountants, company secretaries, bank officers, real estate agents, valuers, and notaries. Now, a notary is just an official who has been authorized to witness and certify the signing of documents in a transaction, and this is to help prevent fraud. Now, these gatekeepers are critical to every real estate transaction, and most times they are just doing their jobs. But then, because these professionals carry credibility, their signatures and approvals can unintentionally and unknowingly create a channel for illicit funds. For example, let's say a lawyer can help set up a company for his clients without knowing the client's true intentions for that company. An accountant can certify a financial statement that looks very legitimate. And maybe a bank officer can even approve a transfer because the account that is receiving the money has a clean record. So you'd see that each gatekeeper's actions may seem harmless, but then collectively they can create a perfect environment for money laundering without being noticed. The hidden face here is that money laundering rarely happens in isolation. So you won't easily find someone just laundering money by themselves. It often rides on the credibility of professionals who never intended to support crime. And this is why anti money laundering training for the gatekeepers is very critical both here in Ghana and across the world. One of the biggest blind spots in real estate happens when people use companies to buy properties. Now, let's be clear. Shell companies are not automatically illegal. No, there are legitimate reasons for companies to own properties, and this could be for asset protection, tax planning, confidentiality, and structuring their investments. But then criminals will often exploit the same structure to hide the real owner of funds that are being laundered. The problem here is that when a company buys a property, the individual behind the purchase becomes almost invisible, especially in jurisdictions where there are no strong registries to know who the beneficial owners of the properties are. This means the company director may be a nominee to own the property, the shareholders may be placeholders to make it look like they own the property as a collective. The beneficial owner may be hiding in another country, and the true source of funds will not be clear. Now, to the property developer or estate agent, it will all look like a very normal corporate transaction. After all, working with companies has the benefits of streamlined transactions compared to personal transactions. But then behind the scenes, a corporate transaction could be a sophisticated layer of money laundering. The hidden side here is that the opaqueness of ownership becomes a problem. And criminals know that the more the layers are, the harder it is to trace the monies. Now, most people think that money laundering ends when you buy a property. Nope. The reality on the ground shows that the purchase is sometimes just the beginning of a much bigger scheme, and I'm sure you didn't see that coming. Now, let's look at some techniques that are set in motion at this stage. The property owner can rent out the property to fake tenants who will be paying rent with illicit funds. And when you visit the property, it may be empty or furnished, but then no one lives there. And in some cases, it may be occupied maybe once in a while, but then there's no real tenant. The owner is the tenant using ill gotten money to rent the property back to himself. You see that sometimes these long things don't seem to make sense, right? But then the long game is what you have to play when you know you're doing something very wrong. Get it? Another technique is renovations, which are used to inject dirty cash. How? Well, imagine renovating a perfectly fine house and then inflating the cost of the materials. Maybe all you do is add one bedroom and then you break down other parts of the building and do other things just to make it seem like a very costly undertaking. You see, it doesn't make sense, right? But then that's your opinion. Another technique happens through the financial institutions when a criminal refinances a property to pull out clean equity. Now, this simply means that the criminal buys a property with dirty money and then later takes a legitimate loan from the bank against the value of that property. Now, so the bank will give the criminal new money that now looks clean because it came from a formal financial institution, and this effectively washes the original dirty money. Another scheme here is selling the property to an associate. Now, what happens here is that the criminal will sell the property to a trusted friend. It could be a family member or a partner in his network. And this sale creates extra layers between the property and then the original dirty money, which will make the money trail harder for authorities to trace. It looks like a normal transaction, but then it actually is a controlled transfer disguised to further hide the true source of the funds. One last technique that is quite similar to refinancing is using the property as collateral for loans that appear legitimate. And this is known as integration. Now, this is often the very final stage of money laundering. By this point, the money looks clean, reasonable, and legally tied to a real asset. Now, most people, even professionals in the industry, never see this side because once the buyer takes possession of the property, the laundering strategy often shifts from transaction-based to asset-based. In all, the real estate sector becomes a long-term washing machine for dirty money. As you can see, it's subtle, it's quiet, and most people have no idea it's happening. Cleaning dirty money requires many legal structures to act as channels and also cover-ups. And that is how come you can see a lot of activity in the real estate space, but then there are no easy ways to find out who is behind them. This is not to say that every transaction must be flagged. No, there are many people with clean money doing business in Ghana, but then it helps to know both sides of the stories that we tell. This is part one of our deeper exploration into the hidden faces of money laundering in real estate. And in the second part, we'll be exploring the structural, societal, psychological, and global layers that drive the entire phenomenon. I'm Desmond Kafui, and this is Ghana Ground Up, where we help you level up with what's happening in Ghana's real estate sector. So do well to share, like, and of course, subscribe to the channel if you already haven't. I'll catch you in the next episode.